Apple up 2.21%. This is Thursday, the 7th of August, 2025. So it's trending as investors digest fresh developments around the company's ramped up US investment plans and speculations about potential tariff exemptions amid shifting trade dynamics. The news has sparked intense debate in both retail and institutional circles, with many viewing the move as a strategic and political win for the company. Yeah, so the company hopes that onshoring some of its manufacturing will exempt it from tariffs, and it may help mitigate some geopolitical risks, especially in the light of the tensions between U.S. and China. Okay, so community discussions are now focused around several key themes: production costs. Investors are debating whether localizing more of Apple's supply chain will lead to higher operating expenses in the short term, given the higher labor infrastructure costs in the US. Profit margins, yeah, those will eat in production costs will eat into margins. Margins will surely and easily be uh, diminished. Job creation, some bulls highlight the potential for thousands of new jobs across tech hubs and manufacturing centers, which could bolster Apple's brand image domestically and serve as a political capital. Political optics, yeah, with the U.S. election. Okay, yeah, okay. Market reaction, the company, the stock saw a modest uptick, yeah, in this pre-market session of Thursday the 7th, and yesterday as well. Yesterday they 60 gained 5.09%. Um, However, not all sentiment is positive. A subset of trading committee remains skeptical, arguing that the news may already be priced in, or that the benefits will take years to materialize. Others caution that any perceived favoritism from regulators could trigger backlash from competitors or political opponents. Yeah. So at some point, this post-market gain was actually 5% or thereabout. So intraday high, it printed yesterday, the post-market session 221. Yeah, 221. Yeah. So this is the 4-hour chart. Higher prices are expected to remain in place up till tomorrow, the 8th of August. And then after that, we might see a contraction of the expansion, a distributive contraction. Let's see what we have. We have 214.02. It's a downward projection. It is, yeah. We have 218 here and 221. So this buying pressure is ramped up. Yes, buying pressure severely bullish, but we have two negative derivatives on its 21 period moving average, indicating that well, it could mean a lot of things, a couple of things. Buying pressure not no longer strong. As a matter of fact, we have three here. We have three derivatives out of four. So yeah, buying pressure no longer that strong. Not no longer that strong. Expect a pullback to occur. Yeah, indicating that the 10 and 21 period moving averages are likely to catch up with the stock in a couple of, maybe within 2 or 3 trading sessions, in a couple of hours. Yeah, it's the 10 and 21 period moving averages. That's 207, 206. It's likely to uh, test those sort of prices. Yeah, 207, or rather, maybe not test them, but if not essentially test those prices, but those moving averages may catch up with it. Yeah, expect a contraction to occur. Maybe, yeah, indeed, it may pull back to such levels. It may pull back. That's what these negative derivatives seem to be implying and suggesting. But surely buying pressure no longer as amplified as it was, even though we have them, indicating that they are seriously, strongly bullish in a very strong parabolic, if not parabolic trend mode. But their derivatives have are all decaying, so they are standing on silt. They are standing on silt. If you like, decaying mash. So yeah, very strong, still holding up, but things are decaying beneath. Short sellers have come in and they're doing their most. So just have a look, and let's just see more news about the stock. Goldman Sachs maintains a buy rating for Apple with a price target of 266, citing a 13% year over year rise in App Store spending for July 2025. Apple stock surged, adding 153 billion dollars in market cap, eighth largest one day gain. The rise followed news of $100 billion investments. Yeah. Apple is collaborating with Samsung to create a new chip technology at Samsung's Texas plant, supplying chips for iPhones. This is part of a $100 billion US investment plan. Let's see how it concerns Apple here. Donald Trump has said he would impose roughly 100% on all chips coming into the US, but exempt tech companies that have promised to manufacture domestically. A big win for Apple and other electronics firms worried about new trade challenges. Samsung to produce image sensors for Apple's iPhone in Texas, according to Financial Times. South African markets factor to watch on August 7th. How does this concern Apple? Okay, so Apple is likely to benefit from an exemption because it's planning to onshore some businesses. The world's biggest chip makers have dodged the bullet for now. Shares of Taiwan Semiconductor Manufacturing and Samsung rallied as much as 5% today, after Trump said manufacturers like Apple that investor stateside will avoid his planned 100% tariffs on semiconductor imports. So the pair's U.S. expansion plans should ensure a carve out. Yet Washington is only likely to sharpen its manufacturing demands. That implies the real pain for chip makers. Okay, other thorny questions, including at what value add manufacturing stage the duties will kick in, yeah, as well as how to determine components origin. Will have to be ironed out too. Some smartphones might feature chips manufactured in Taiwan that are packaged in Malaysia, then assembled into a device in China, for instance. Yeah, Apple's domestic investments initiatives so far focus on iPhone components such as semiconductors and glass, falling short of Trump's demands of a made in USA iPhone. And Taiwan's officials have already said that TSMC will not be producing its cutting edge next generation 2 and 1.6 nanometer chips in the US next year. The Trump administration might make that the precondition, or at the very least, pressure the company to relocate more research and development to the US. Chipmakers are not only out of the wood, not out of the woods yet. Okay, so